Hey everybody, welcome to today's crypto. It's been a busy Monday for crypto. Looks like there's quite a bit of activity out there, and it's globally things are beginning to pick up some steam in regards to how governments are treating cryptocurrency these days, and whether or not these are things that are going to continue in the future, or at least is this something that's just a temporary situation. Um, Either way, it's turning out to be quite a show, that's for certain. And we're here to cover it. And I'm seeing a lot of changes so far out there just since this morning that have changed quite a bit since yesterday. Obviously, yesterday a lot of this was down, and now it's not. So it's up and down. That's the nature of the crypto beast, the Bitcoin and cryptocurrency market in general. So anyway, let's get right into this article here about the G20 bankers rejecting regulating cryptocurrencies. Whether or not that's a good thing or a bad, let us know in the comments below. Like, share, and subscribe if you like this kind of content. G20 regulatory body rejects regulating cryptocurrencies. Too little consensus was found during the Financial Stability Board meeting to pursue radical action toward the cryptocurrency world. Mark Carney, governor of the Bank of England and current chairman of the FSB, said in a letter, "The FSB's initial assessment is that crypto assets do not pose risks to global financial stability at this time." I didn't realize that they're a risk. Carney, however, was explicitly in favor of regulation in a speech earlier in March. Quote, "A better path, I suggest, would be to regulate elements of the cryptocurrency ecosystem to combat those illicit activities," because banks never engaged in any of that. "Promote market integrity." Of course, the banks have the highest of integrity. "And protect the safety and soundness of the financial system. Indeed, the time has come to hold the crypto asset ecosystem to the same standards of the rest of the financial system." I don't know if that would actually be a good thing or not. That's an editorial. Now the FSB chairman suggested that whoever succeeds him would lead a financial watchdog more focused on reviewing rules rather than pushing through new standards. Carney will stand down next year. Adios, muchachos. Resistance to regulation from the leading central bankers and finance ministers is a new trend ever since U.S. President Donald Trump ordered American regulators to scale back on it. The FSB now presents itself as an open, disciplined, and efficient body which has scrapped a quarter of its working groups. Quote, as its work to fix the fault lines that caused the financial crisis draws to a close, the FSB is increasingly pivoting away from the design of new policy initiatives towards dynamic implementation and rigorous evaluation of the effects of the agreed G20 reforms. End quote. In a hearing at the U.S. Congress last week, Coinbase's CLO, Mike Lempres, said there is no need for further regulation, but more clarity regarding the roles of the financial watchdogs. In the meantime, the Winklevoss twins are about to create a self-regulatory body for cryptocurrencies, the Virtual Commodity Association. In February, the ECB's chair of the supervisory board, Daniel Noel, told CNBC that regulating cryptocurrency is not exactly very high on its to-do list. Europe has no cryptocurrency regulation, and Bitcoin does not pose a threat to the euro. In the eyes of the European Central Bank, Mario Draghi, governor of the ECB, said Bitcoin isn't mature enough to be regulated. The cryptocurrency world may have started about 10 years ago, but there's still much room for improvement in its underlying technology. The last thing this industry needs is regulation that harms its potential to change the world as we know it. The new paradigm may be a reality in 5 years' time if regulators don't press too hard. I like Mario Draghi. That's the crypto news today. breaking news headline update. I'm your host, Winkle Floss Nakamoto, and I'm out.